So here's the funny thing I'm finding out as we go into what we all know is a recession is that a lot of people said they had an investment strategy, but they didn't. They really based everything on their gut. They based everything on how they felt. And if you don't believe me, well, then you can go to CNN.com and look at their fear and greed index. CNN.com/markets/fear and greed. It's right there. But you know what shows me that is pretty funny here is that right now we're on this extreme greed is 100%, extreme fear is 0. We're rocking in at about 23 right now today. 1 week ago, we were at 22. A month ago, we were at 21. A year ago, we were at 37 on the fear and the greed, which means that we were almost neutral, 50 being neutral. But the reality is there's been so much money made in the last 12 months in the real estate market, and yet we're running on a society that is based on fear. The crazier thing is when you look at the S&P 500, its 125-day moving average, it's in line. It follows the fear and the greed scale. It means that most people are in the stock market playing fear and greed. How's that for an investment strategy? How many of you are really doing this? This is what you know to do. I think, to me, it's kind of mind-boggling because I see people that operate this way, and yet they call themselves sophisticated investors. They call themselves educated, but they get their media news, I guess. But, you know, most of what you see on the CNN business page is that it's related to the stock market. And I hope that's true, but I hear it time and time and time again. I'm hearing it even more now. Oh, prices are going to crash. We're going to see 75. We've seen a 75% rise in prices. We're going to see a 75% decline. I guess if you're running on the fear scale, that might be the case, especially if that's what you're selling and that's what you're peddling and that's what you're proliferating. But you know what? I don't think that's how it should work. You know, I was hanging out with some guys this last weekend and they made an absolute fortune in 2009 and 2010 and 2011 and 2012 in real estate. Those same guys are still making money today in real estate. But their investment philosophy hasn't been one that changes based on how they feel. Their investment philosophy has been one that's been based on fundamentals, on how the market looks, on what things they can really deduce. You know, you take someone like Warren Buffett, who is definitely a very prolific stock investor, done very well in the stock market, right? But he looks at a long-term approach. If there's good fundamentals in what you're doing today, if you can buy the asset, if you can make it cash flow, if you can get it to work today, and you can have adequate reserves and you can have a good business plan, there's no reason to worry about what this thing's going to do in the future. You've got a hedge built in. Obviously, things happen. Life can't be controlled. It's whimsical. It takes on elements of its own. It does its own things. But if you're really looking at this as the only thing that you can do as far as your investment strategy is to deal with either fear or greed and to fit in the scale and to go with what comes through the media, then man, that's a terrible strategy. I'd love to teach you how to do different things, how to learn the underlying techniques of the market, understand what people are doing, why people are buying and building and moving, and all the things that go into what real estate really is. The truth is supply and demand dictates that market as just about any other market, from Teslas to cell phones, right? They always come out with the iPhone 96 right before the iPhone 95 loses everybody's interest. So If you're working on this scale of how bad does everybody think it's going to be, I'm going to wait until it gets worse. I'm going to sell now because it's about to get bad. I'd like to show you a way to do things differently. So if you're interested in that, let's go to our website, check it out, see what we're doing that's different, see how we're established in the markets that we're in. We know what we're doing. We understand that. And we're making sense of times that have lots of fear in them, right? I mean, if you look back on it, gee whiz, a year ago, we were right in the middle of COVID and we had more confidence in the market than we have currently. But the good news is we are at a 25 on the, or 23 on the scale. And a month ago, we were at a 21. So I guess if that's how you want to run your life, now is a good time to go get some life insurance, because it could get worse, and it probably will. But if you've got a great investment strategy, none of that's going to matter, and you're going to be just fine.